What, we got pre-registered? Everybody in here. So, come on. Everything's towards the tail about Halloween night. Anything happen anywhere?
Got any good ones?
Yeah, I don't have any trick or treaters. I drove over in old neighborhood I used to live in. We used to have 200 or 300 trick or treaters. But last night, they had 2 rows of cars parked everywhere in that neighborhood. There was probably 500 of them.
Oh, suppose.
Oh, yeah. So it was fun. I didn't mind it. I was went to see how people dressed up. You know, the Star Wars characters. Oh, you know, Superman, Batman, Wonder Woman, all that. Supergirl. Georgia, did they do anything? You don't have a Halloween in your country, do you?
Lately, we do.
Lately, you do? Okay, what do they do in your country for Halloween?
We dress up and have a party. We don't do trick or treat.
Kids don't go trick or treating?
No, we usually dress up.
Okay. Good, how about your country? You all do anything Halloween? Do you?
Halloween. Yeah, I mean, but not like here.
Yeah.
Some people do some.
Thanks. Everyone don't observe Halloween. They don't have Thanksgiving Day, especially on the same day we do, and Christmas, it may vary also in different countries, and Easter and so on. So every country in the world don't practice the holidays we necessarily practice. Okay, I want you to turn to page 246. Clayton, have you got pre-registered for next spring?
Me?
Yeah.
I sign up for tomorrow. The coffer is not here. Somebody gonna be in her office, so I'm gonna come.
Who's gonna advise you since Copeland's not here?
She sent email. Somebody is gonna be there.
Okay. Samuel, how about you? Have you pre-registered?
I have not. What's the deadline?
Well, we've got 2 weeks, I think, this week, next week. So try to pre-register. Of course, we'd take you back even if you register on January the 10th, probably January the 31st. But pre-registration, that helps determine classes and so forth. So please try to do that. And of course, I give you 5-point bonus on the exam if you pre-register, so that helps. When Halloween was on the weekend, I would go down to Cleveland, Tennessee with my grandkids. And Mars Candies has a factory in Cleveland, Tennessee. Excuse me. Most of the kids just go downtown. All the stores gives out trick or treat. And Mars Candies has a bag of chocolates for everybody, young or old. So that was nice. People still dressed up every which way, and saw all kinds of adults dressed up with their kids. All right, let's see if you know remember the high-low method. You're going to have 2 on the test in multiple choice form. So let's see if you remember the high-low method on page 248. Take these numbers at the bottom of page 248, 246, 246. Need to look at that a little closer. Page 246. All right, bottom of the page, exhibit 5A-4. I need to take those numbers, use the formula, and give me the high-low method. You need the formula, it's on page, oh, that's regression analysis. I don't want you to do that. You don't really need to use the formula. So I want you to use the high-low method on page 246, bottom of the page, see if you can calculate and do the high-low method.
Yeah. Right, I had to say, hey. Pre-rest again. Go right ahead. This, okay. Yes, sir. Brought both of those down.
No, test here. Okay. Yeah, good. Okay, now what's the high amount there? January, July, what's the highest payment days? All right, is that 8,000? All right, and the dollar amount attached to that 8,000. Is that $9,800? Dollars. Now, what are the low days?
March.
March has 5,000. And the dollar amount for March.
74.
All right. Now, if we take the high and we subtract the low, in dollars we get, looks like 2,400. And in days, it looks like 3,000. Now, what do I do with those numbers? What do I do with them?
5.
I divide 3,000 into 2,400. Okay, what will that give me?
0.8.
Do what?
0.8.
Is it 0.8 or just 0.8? What?
It's the same thing, right? 0.8.
Just 0.8.
Yeah.
All right, 0.8 is 80 cents.
Yeah.
Okay. Now, what do I do with that 80 cents? And what is that? What is that 80 cents? What's all right? 80 cents is going to be your variable cost. All right. So if I apply that to 8,000 units times 80 cents, what is 8,000 units times 80 cents?
6,400.
All right. Now, if I subtract that from 9,800, what does that leave me?
3,400.
So now, what is that 3,400 going to be?
Fixed cost.
Fixed cost. All right. Now to check that, let's do the 5,000. 5,000 times 80 cents would be, looks like $4,000. Now subtract 4,000 from 7,400. What does that leave?
3,400.
So 3,400 must be your what?
Cost.
fixed cost. Okay, you'll have two multiple choice, at least 5 points apiece. Well, that's a letter grade on a test if you miss those, or if you get them right, it's still a letter grade. Okay, now that's chapter 5. Okay, now chapter 6, you've only got 4 more problems besides those 2. Basically, you got 1 problem per chapter. All right, so chapter 6 was variable costing and segment reporting tools for management. Now, from this chapter, you're going to have 2 little income statements. 2 little income statements, okay? Basically, those income statements, the variable costing is, of course, sales minus variable cost equals to contribution margin minus fixed cost is equal to net income. But now remember, we may break variable costs down for factory, selling, administrative, and so on. And you can even break fixed costs down. Now, basically, your absorption costing was sales minus cost of merchandise sold gives you gross margin minus selling and administrative gives you net income. All right, so you will have those 2 income statements. That's 1 problem, all right, on your test. Exhibit 6.2 is a good example of the variable costing on page 261. And exhibit 6.3 is another good example to go by on page 263. I didn't give you a lot about traceable, non-traceable, segmentation, and so on. But if you would look at page 275, you have 2 problems from this chapter. And notes on page 274, look over that break-even analysis again. So you will have a problem on break-even analysis. Well, you've got 2 problems from chapter 5.
You mean chapter 6?
Got chapter 6. Well, you had 2 high-low methods in chapter 5, and you got 2 problems in chapter 6. That only leaves 2 problems to go. Okay. All right. We skipped chapter 7, activity-based costing. Like to have had time, went back and went over a few things on that chapter, but we probably will not have time. All right, now that brought us up to chapter what, 8, since we skipped 7?
Yes, sir.
All right. Your 5th problem then on from chapter 8 is a cash budget. And we went over and over and over again and again and again on cash budgeting. We went over collections. We went over disbursements. The hardest thing on disbursements will be your accounts payable for your merchandise inventory. So your payments, in case you had a lagged month or 2. Accounts payable is usually, you didn't pay it this month, you pay it next month. Sales, you might collect it over 2 or 3 months. You don't know how much cash you're collecting. So a cash budget, we went over and over it. So I will not be reviewing that brings us up to chapter 9. Okay. Um, and on that cash budget, probably your best page to study a cash budget is page 382, which would be just Schedule 8. It's not an exhibit. You'll probably have to do it either for 4 quarters or 3 months or something of that nature. I'm not giving you a budgeted income statement or a budgeted balance sheet or anything of that. Now that takes care of 5 problems out of 6. So you know chapter 9 is going to be your 6th problem. A flexible budget. Performance report, that is. The other day we talked about a planning budget, a flexible budget, and the actual budget. The actual budget just happens, don't it? That's what you actually spend. Planning budget is something you did beforehand. A budget is just a plan. Okay. All right. Budgets don't always go as planned, but the flexible budget is based on the planning budget. Okay. Now, what does flexible mean, Georgie?
Flexible means like pro forma, estimation, projection.
Well, I'll give anybody 100 on the test if you can write down exact words he said, because I cannot. Georgie, just giving you a hard time, Georgie. All right. So, what is a flexible budget?
It's an estimate of what revenue and cost should have been,
At what?
given the actual level of activity for the period.
All right. Now you take the planning level, and what's the actual level? Yeah, maybe more than planning level. We have planned 8,000, actually 8,200. But you should have had a budget, flexible budget somewhere in there for 8,200 in case you did reach 8,200. So flexible just means you prepare for different levels of production or different levels of sales, which you're going to talk. All right, you had 2 problems for the day to review those flexible budgets. Kayla, what were those? 19, what?
23, 25.
23 and 25. Now, 23 and 25 should be flexible budgets, actual budgets, the whole performance report. Now, when it says a performance report, make sure you just put down all 3 budgets, okay? So if you got those problems, please take them out. Just give me a minute to find these solutions. We're moving on down these dates, even on Moodle. Semester's getting short. All right, so let's look at problem 23 and okay, page 442, performance report for a nonprofit organization. Here we have a blood bank, a private charity, okay, a nonprofit, could be a church, all right, could be a college, okay, could be polio foundation or cancer foundation. All right, most of these charities, now this is a blood bank, okay? Using cost accounting for a blood bank. Okay, the blood bank has just finished its operation for September, which was a very busy month due to a powerful hurricane that hit neighboring islands, causing many injuries. The hurricane largely bypassed St. Lucas, but residents willingly donated their blood to help people on other islands. As a coincidence, the blood bank collected and processed over 20% more blood than it had originally planned for during the month. And they give you a plan and budget on page 443. A report prepared by a government official comparing actual cost to budgeted costs. And you got this plan and budget of 500 units. And you've got this actual results of 620 units. The managing director of the blood bank was very unhappy with this report, claiming that his costs were higher than expected due to emergencies on neighborhood islands. He also pointed out that the additional cost had been fully covered by payments from grateful recipients. The government official who prepared the report countered that all of its figures had been submitted by the blood bank to the government. He was just pointing out the actual costs were a lot higher than promised in the budget. Now, first off, because these are liters of blood, a liter is not as big as a quart, is it? But it's bigger than a pint, I think. At one time, gasoline stations all over the country were geared up to have pumps in case we went to the metric system. We were supposed to have been 100% on the metric system in the 90s, but we didn't go to it. But gasoline pumps were set up, ready to sell gasoline by the liter. Okay. All right, but some people, if they give over a pint of blood, they're going to be pretty weak or dizzy. Okay, so the following cost formulas were used to construct the plan and budget. Okay, you can take these figures and come up with the plan and budget at the top with 500, and then of course your total expenses were 28,750. Well, now your actual budget, your expenses were 31,540, but golly, you took 120 more liters. Now, using an Exhibit 9.8 as your guide, prepare a flexible budget performance report. Do you think any of the variances of the report you prepared should be investigated, or why? Now, you're going to do a flexible budget for how many units? Units, liters, or what liters, or whatever. How many? 620. So, and then you're going to do a performance report. The only difference here, since it's nonprofit, you're not coming up with a net income, are you? But you're coming up with cost. But same concept. Income, all you have to do is multiply and get revenue and subtract all those expenses. Okay, the Excel problem. How many of you have done that? A couple of you already turned it in. But always do the Excel problems, okay? Kayla, have you not had finance yet? Who in here has had finance? Georgie has. All right, Georgie, are you pretty good with Excel? Are you good at setting up formulas? Okay. Well, at the end of the class, I want to give you some figures and see if you can set up a formula and a spreadsheet for it.
All right.
Okay. We'll see how good you are. Dr. Sneed, he couldn't do it for me. He teaches finance.
We don't learn Excel and finance.
Oh, I know you don't learn Excel, but you're going to take what you know about finance and Excel and put it together and see if you could print me out a sheet.
All right.
I believe you can do it. All right. I forgot the formula. I used to teach finance too, but I forgot the formula. Well, it says it takes you 30 minutes to do it, but I'm sure some of you all did it quicker than 30 minutes, a lot sooner. Kayla, 15 minutes? About right. Okay. Okay, so let's look at the whole report, and this is what you have on the test, a performance report. All right, we had the actual, and we had the planning. We had to insert the flexible in between for 620 units. Now, 620, we had to multiply that by what for your medical supplies? $15? All right. And then, of course, your lab test was what, $12 times 620? And your depreciation, did you leave it the same?
Yes.
All right. And your rent, you left it the same. And utilities, the same. Oh, wait a minute. Yeah. That's not right, though. Utilities, I don't see how they could ever be fixed. Water, maybe telephone, electricity, all that goes into utilities. And then under administrative down here, it was what, 30,000 plus 250, $10,000 plus 250 times 620 gave you 11,550. Okay. Now, once you get that in, this is one of your problems on your test. Just don't have revenue and net income. All right. You know, if your actual results, anytime it's less than your flexible budget, it's favorable. And same thing here. Your actual lab test, or what it could have been, is favorable. Equipment depreciation. Now, I don't know why the depreciation went up. Usually depreciation is fixed. Now, however, if you were depreciating, you folks know a little bit about accounting, if you were depreciating by the units of production method, it has to go up. Depreciation would not be fixed if you were using units of production. Okay? Or if you're using some of the current IRS, you may see RS methods, okay? Okay, so naturally that's unfavorable. All right, rent stayed the same. Utilities went up $70. That's expected. Unfavorable. Administration went up more than what you thought. You know, doing 620 instead of 500, you may have had to pay some overtime in here, some of those administrative salaries or whatever, if somebody had to be on duty. The bottom line, if you show this to any government official or a supervisor, you should have spent $32,290. So you only spent $31,540. That's definitely in your favor, isn't it? So that's what you got to compare actual with flexible. You cannot compare actual with planning unless it's the same number of units. So that's what a performance report is. Now, if you look at, now that's spending variance. Spending variance is talking about, of course, dollars and the difference in units. But activity variance is the 120 different activity. Now, all these are going to be usually unfavorable. It's hardly ever you get a favorable because you're comparing 500 to 620. That's like here you're comparing apples and oranges, but here you're comparing 2 grades of oranges, okay? All right, now you can read what the author said about the variances. That's 5440. It's like you took some shortcuts on lab tests. Should have spent $7,400 and you only spent $61. May have took shortcuts. Maybe they use the same needle to draw blood from everybody. Or whatever. That'd be supplies though, wouldn't it? Okay. Less was spent on lab tests than should have been. But they've gotten a discount. Now, when you give blood, you think, who in here has given blood? Okay, Mark sells his once a month for extra income. But anyway, do they test your blood for certain diseases before they take it? Okay. And some of these men get these tests. Okay. I'm just kidding, Mark, but people do sell their blood. Okay. Did the blood fail to perform a required test? If so, was this wise? No, it's not. In addition, the unfavorable spending variance for equipment depreciation requires some explanation. Was more equipment obtained to collect? So if you had more equipment, you'd have more depreciation. Or again, the units production method could have been used. All right. This equipment, all you would need is to test the blood. So that's problem 23. Does anybody have a question? Okay. All right, problem 24. Critiquing a report, preparing a performance budget. Now down here you have actual, you have your planning budget, and you have your variances. You've got actual, planning, and variance. On 24, you've got actual and planning and your variances. All right. Note that the revenue and cost in the above report are unit revenue and cost. For example, the average office expense is $135 per exchange. All right, the average actual office expense is $112 per exchange. Legal and search fees is a variable cost. Office expense is a mixed cost. And equipment depreciation and rent and insurance are fixed costs. All right, in the planning budget, the fixed equipment of the office expense was $5,200. All the company's revenue comes from fees collected when exchange is complete. 1, evaluate the report prepared. 2, use Exhibit 9.8 as your guide. Prepare a performance report that would help the owner. Now, using the report you create, evaluate the performance. Now, the performance report is what I'm interested in for number 25, I guess it is. Or did I read 24? I believe I read 24. Nobody stopped me. Okay. All right. But now for 25, you have actual results and planning results. And number one requirement, the company's president is uneasy about the cost reports and would like you to evaluate their usefulness. What changes would you make? But number three, use exhibit number 98 as your guide, prepare a performance report. Okay, so we're doing the same thing, basically. Now 25, it said it took 45 minutes. All right, Monica, did you do this? Number 25? About 30 minutes? All right. Anyway, they just give you a suggested time. You can do it better than that. Okay, looking at number 1 and 2, though, before we look at a performance report, the cost reports are of little use. All right. The problem is that the company is comparing budgeted costs at one level to actual cost, budgeted or planned. Costs that are variable will naturally be different. Although the cost reports do a good job of showing whether the fixed costs were controlled, they do not show much about variable costs. Now, the company should use a flexible budget approach, what we've been doing. What the chapter's been doing. Every problem has been a flexible budget and a performance report. All right. They gave us probably actual and planning. Did they give you the formula to do your flexible? They give you the dollar amounts to do your flexible? Because you have to figure them out. Number 25. They gave you actual, they gave you planning, but did they give you a cost formula? In other words, Monique, did they give you the 80 cents and the 50 cent share?
They did not.
Do what?
They did not.
All right, you had to calculate that then, didn't you? That's what I was asking. Okay. Now, if we took the planned results of 40,000 units and divided that into 32,000, what would that give us?
80 cents.
If we divide that into 20,000, what would that give us?
80 cents.
80 to 50. But now how about indirect materials? Is that just 40 divided into 56? All right. And wages and salaries. How'd they come up with that? They just give you a fixed amount?
I
What?
suppose so.
Do what?
I think so.
Probably a fixed amount, yeah. Yeah, then you can still get your breaks there. But how you gonna come up with that with a flexible budget? Still use 80,000, aren't you? All right, equipment, still 60. All right, so you calculated the numbers here. You planned on 40, but only 35 happened. What are you assembling anyway? What are you assembling?
Good. So,
Well, it's a assembly department. Let's say it's Ford truck. Okay, that'd be all right. Anyhow, we prepare a flexible budget for 35, so now we can compare oranges to oranges, 35 to 35, actual and flexible. And here, when you compare these, the supplies are still unfavorable. Your scrap is unfavorable. Your indirect materials unfavorable. For some reason, we save 800 in salaries, favorable. So, yeah, this company needs to look at actual results versus flexible results. Why did you spend too much on supplies? Why did you scrap? Why is scrap going up? And why is indirect materials going up? May have inexperienced or sloppy workers. being there doing a bad job somewhere. But that needs to be investigated. Okay, now you know what's on your test. 6 problems, and we went over similarities to them. Okay, so I expect you to do well on the test on Tuesday. All right. I've got another class before, so the earliest I can start you on a test is 15 to 11. All right. Okay, we're going to start a little bit of a chapter today, talk about it on chapter 10, standard variances, and so forth. Standard and cost. Now, some book says we have 3 managerial or cost accounting systems. Every book has 2, working process or process and job order. Process, cost accounting, job order, cost accounting. But some call this another system, standard cost. All right, just a few questions. When we talk about cost, just a minute. We compare our costs to other parts of the country. Now, in West Virginia, did you say the minimum wage is how much?
875.
How much?
875.
All right. Now, how about other parts of the country? What's the federal wage rate?
Higher.
Really? It's lower. West Virginia is higher than federal. I believe it's 735.
Yeah, that's it.
All right. But if you live in West Virginia has to go by the higher. Now, if West Virginia was 675, they'd have to go by 735. So the standard wage rate all over West Virginia, minimum wage anyway, is 875. Now that probably upped other wage rates too in factories and so forth. Now, up north, the northern states, let's say a factory wage rate was $20, but in the South, a factory wage rate is $15. Why?
Cost of living.
Could be cost of living. Like if you work at McDonald's in the DC area, what do they pay, about $12 an hour? And they still can't live on it probably. Talked to Mr. Imo about that. He lived up in that area quite a while. Okay, now, why in the world does West Virginia have higher gasoline prices? I can get it over in Virginia regular for about $2.53, whereas if you take off up Interstate 77, you may be paying $2.73. Why? West Virginia has more tax on their gasoline than Virginia does. Okay? There's all kinds of taxes included, but West Virginia has more state tax. So what I'm trying to say, things cost different in different areas, don't it? Now, if I had a factory in Atlanta, Georgia, I might can order materials and they're going to only cost me $12 a unit. But if I'm here in Bluefield, West Virginia, those materials may cost me $13 a unit. Why? Why would they cost more in Bluefield? The what?
I guess the need for income is higher.
No. Transportation. In Atlanta, you probably have plenty of air transportation, rail transportation, truck transportation. I don't know about Atlanta. Are they on a river? Most big cities are on a river. Like Detroit's on a river. But there's a big river near both cities. So I'm trying to say water, air, and land transportation cuts down the price of materials in some areas. And we know Bluefield does not have an airport. It does have rail and, of course, truck. And then at one time, there was not interstates into Bluefield. There were 2-lane roads. All right, so that's a little bit of talk about standards and what we mean by standards. We pay so much one place and so much we don't. Now, let's look at, we'll look at one page with you, if I can find it here. Look at page 456. We'll try to look at a couple of pages. And this is direct materials. Now, I'm going to give you a short format here. That's actual times actual, and then actual times standard, and then standard times standard. All right. Now, 6,500 pounds. I'm just writing down what they have, times 380 is what, 24/7? Follow with me on page 456, Exhibit 4. Now, actual times standard is 6,500 pounds times $4 is equal to 26,000. Then we have 6,000 pounds should have been standard times $4 is equal to 24. All right. Now what do we have here? We're talking about units, and we're talking about price. Okay, now the standard price for this material we're buying is $4, but somehow or another we got it for $3.80. Maybe it's because we bought in quantity. Maybe it's because we do have better transportation. For whatever reason, we got it for $3.80. But however, the actual units we should use, the standard should be 6. We went over 500 units, didn't we? So maybe we bought some bad material and had to use 500 more. So you could analyze these things and do maybe a lot with them, okay? Hey, Dr. Burko?
Yes, sir.
But now this is on mine for 8 weeks.
You just teaching it for 8 weeks.
8 weeks on mine, 201.
201.
Yeah.
Okay. Okay. You're lucky.
Okay.
You're lucky.
Good luck. Okay.
Thank you.
Have any of y'all taken those quick 8-week classes that's been offered now? Nobody's taken them? Of course, Mr. Imel's going to do a trailer in accounting. I didn't want to do it. I'll take my just normal courses, so on. He can get over on for it. I don't want it. But to do accounting 201 in 8 weeks, all online, it's tough. Not many will survive, but it's there if they want to try. Any 8-week class, it's accelerated, it's double quick. Okay, like that's a name of a zip-in market, double quick. But anyhow, we use too much material. So are we buying faulty material to get a good price. So we gotta compare a standard. We're using 500 too many units, but we're getting a good price. So what's the difference between 26 and 24/7? What is the difference between 26 and 24/7?
1,300.
How much?
1,000.
Okay, now that, you can see what variance they call that. That's a price variance. Now, another way you can get that price variance, what is 20 cents times 6,500? Multiply 6,500 times 20 cents. That still give you 1,300? All right. Now, the difference here is 2,000 usage variance. Now, you can multiply 4 times 500, too many units, and that should give you 2,000. Now, my overall variance is 24/7 from 24. So my overall variance is 700. All right. Or I can subtract 13 from 2,000. Now, was this favorable or unfavorable? If you paid 380 and the standard is 4, that's got to be what? Favorable or unfavorable? All right. Now, if you should have used 6,000, but you used 6,500, that's got to be what? So if you subtract a favorable of 1,300 from an unfavorable of 2, that gives you a, all right. Now that's what you're looking at on page 456. All right, and how to analyze it. So read this chapter well, of course, for next Thursday. Worry about your test coming up, of course, for Tuesday. All right, now if you look at page 459 real quick, we can set the labor rate variance up the same way, but we won't today. But here, the actual hours is 1,050 and the actual rate is 2,160. All right. Now the standard rate is $22 an hour and the actual rate is 2,160. That's why I'm trying to give you a difference in wages and geographic locations. All right. And what might account for it. Now, sometimes unions might account for higher wages. And sometimes you may have a factory that has all experienced people and it's going to be higher wages. Now, if you got a factory with a lot of inexperienced people, that may be why you're wasting 500 units. Okay? They're messing them up and they're rejected. Now, also on labor, if the standard time is 1,000 hours, but it took your workers 1,050. What's wrong with your workers? They should have done it in 1,000 hours, but they did it in 1,050. Okay. Maybe they sat down the job. Maybe they are inexperienced, but it took them longer than it should have. Okay, with all that in mind, study for your test. Everybody seems to have pre-registered, and I'll see you Tuesday.